Hi, everyone, and welcome to Mish's Market Minute. I am your host, Mish Schneider. And once again, I'd like to thank StockCharts TV for allowing me this platform each and every week. And thank you to those who are watching, and particularly to those who take the time to write wonderful comments to me. I get to see them on the YouTube video, and I always respond. So please feel free to keep that up. So for today, what I'd like to do is the market is an interesting precipice in that we've already seen new all-time highs in NASDAQ and in the S&P 500. We have seen the Dow kind of hanging tough near the highs, although it hasn't performed quite as well as what the NASDAQ and SPY has done. And of course, that leaves our dear grandpa Russell 2000, which is doing better as we end the week. Of course, we have one day with the unemployment numbers Friday ahead of a long weekend. I'm recording this the day before. That should make a big difference. But nonetheless, put that all aside, I believe that it's the transportation sector right now that could change not only the whole macro picture of what we're expecting in terms of economic growth, but in return, also change the whole dynamics of the overall stock market. So why do I feel that way? We'll get to standard deviation and real motion when I get to the charts. I just wanted to put up there, we are going to make one change. But going back to transportation, it has been a tremendous underperformer. And that is something very interesting to note. There are some real tangible reasons for that. The first one, of course, being the obvious variant, the fact that people don't really know what's happening with the variant, the fact that globally there's been some travel restrictions, and even here in the domestic US. Of course, part of the whole transportation basket is airline stocks and cruise lines. And they have obviously been affected by the fact that now all of a sudden people are worried about how far not only the Delta variant would spread, but we're already hearing little secret words about the Mu variant coming up next. So that's one reason why it's so important, because the transportation will forecast ahead of the actual news that things are relaxing in terms of the fear. The other reason why it's extremely important is that it is exactly how you measure the consumer demand, because how fast and how much goods are being transported around not just the country, but internationally. So that's where you get like rail and FedEx and UPS. Those have been really underperforming, not every single one, but many of them have. And so what we have right now is a situation, and we're going to look at the chart in a moment, is where IYT is either going to be the make or break, not only for the market, but also going to tell us what's going to happen with the actual economy, and also could dictate what the Fed is going to do. But it also gives us some really great trading opportunities. And that's where we're going to go into a little bit on the standard deviation and real motion, and how we find some of these overextended down moves when they're ready to turn. So as always, I'm going to show you the symbols we're going to be covering. All of these are within the basket of IYT. I've included most of the top 10 of the heavily weighted ones in the transportation. And then I added a few of my own because I thought that they were interesting and also potentially very telling about how people want to move around. So let's go to the charts. Okay, so before we get into all of that, let's go back to what you saw in one of the bullet points, which is the whole idea of standard deviation. So when we first started to bring you this product of real motion as the ACP plugin, and I hope a lot of you are already using it. If you are using it, this is certainly applicable to you. And if you're not using it, it's still really good information, particularly as I show you the charts each week. What we did was, if you look at the real motion indicator, which is down here, and if I go back this way and I click on the real motion indicator, you can see that what we did was we changed the numbers up on the standard deviation to 2, and the number of the deviations to 2 on the downside. And the reason why we did that is because we've got here the Bollinger Bands based on those standard deviations. I'll explain that more and why that's important. Then the other thing that I did was I went to the Bollinger Band thing right here, and I put in Bollinger Bands for the price. This is for the actual price chart. So I have the periods of 20, the standard deviations of 2. And so that is something also to be adding in there. And that's why it's good that I'm recording this. And then, of course, you can close that up. And what that's done is it's given us now a situation where we have Bollinger Bands now included on the price chart. So you can see we have a solid line here, a solid line there, and then this is the midpoint line, the dotted line. And so what I'm going to show you today is how, when you can have these things in there, how the measured momentum with the price charts or in conjunction with the price charts can find situations where the market is overextended, and that could be, of course, for both the long side and the short side, and offer these tremendous opportunities for reversals, kind of like a classic mean reversion. I've gone over and over and over this with you in terms of reversals using 60+ day highs and lows, but this is yet another way using the real motion. It's a fantastic confirmation for you to do. So we will probably change the video that we have instructionally on how to use the real motion indicator, but for now, this is all you really need to know, is change your deviation to 2, and then add your Bollinger Band with a 20 period and a deviation of 2 as well. Okay, so now let's actually go to the particular charts. And of course, we're going to start here with IYT. That's the ETF that represents the transportation sector. And so now let's go and put that into what we're talking about. So in terms of the standard deviation that I just changed, you can see that we have a Bollinger Band that's kind of not really visible there. But even as transportation and prices come off, you can see in the momentum, when it touches down on the Bollinger Band with that new standard deviation, like it did here, and like it did here, or in this case where it broke it and then came back through, you can often see that that may mean now that it's overextended to the downside in this particular case. If we take a look at a period of time when it was overextended, you saw that here. And even though the price continued to go up, we started to see that the Bollinger Band didn't clear, and it tested it one more time at the peak. And then of course that turned out to be the peak. So now if we're looking at it on the downside, it broke to the downside here, came back through. You got a little bit of a rally here on price at that point, but then it started to come back off. And since then, even though the price has repeatedly gone down, the Bollinger Band has held. And now you can see we're starting to move up from the Bollinger Band in terms of the real motion. And that's why this Bollinger Band with a standard deviation of 2 is so important. Of course, this here is the leadership indicator, and that's exactly the same. Now, if I go to the chart and I bring this down, come on, let me do that. You can see what's happening here with IYT in terms of price. So this is where we like to use the solid line. In this case, while we were touching down on the Bollinger Band down below, if you look at real motion as my line is going down here, my vertical line, you can see that example I just showed you is when we touched the Bollinger Band, but we didn't break it. And the next couple of days later, we started to go through it. Well, at that point, we had that gap down. And the next couple of days, it showed the price movement going up. Wasn't a huge actual rally from there. But what was interesting is that this low has not been violated yet, even though transportation has been sort of going sideways. So that turned out to be a good stop under that low. And I just wanted to show you how it's used. So now let's go a couple of other times. So even though the price came down and that price over here never got violated, that low of 245.48, we can see that as we moved down, the Bollinger Band never even got touched. We started to go up in momentum. And now here we are in a situation where we're above the Bollinger Band, but we're not above the 50-day moving average in the actual real motion indicator. But we are starting to pierce the real, the 50-day moving average in the actual price chart. So what do we know about these things that I like to call phases? We want to see 2 closes above the 50. So as I'm speaking to you on Thursday, it's trying to close. tomorrow, Friday, how it closes, assuming today closes above the 50, will be extremely important, I think, to the entire market. And of course, the next test would not only be getting the phase change, but it would be watching the momentum continue to grow. And it would also mean that as we get to the top of the Bollinger Band right here, we'd want to see that actually clear. And that hasn't really cleared, did a little bit over here, but you can see it actually hasn't really been above this Bollinger Band in quite some time. I think that could be a major sea change for the actual market. So just to repeat, you want to watch the IYT sector as a key really to the whole market. You want to see two closes over the 50. You want to see this actually start to try to tackle the 50-day moving average. Not that you have to wait for that, but that's what you want to see. You would risk to the low over the day that it actually took out the 50. And then as it got closer to the upper Bollinger Band on the price chart, or around 259, you would want to either see if it breaks over to add to the position potentially, or at least at that point become a little bit more defensive, depending on where you got in, looking more at a kind of a no loss stop. And finally, to complete that picture here, we're also looking at the leadership, which of course we know IYT has not shown any leadership. So it's also possible that if the S&P 500 starts to actually go more flatline, or even corrects a couple percent. We haven't had a correction in SPY in a long time now, more than 5%. And this starts to show some leadership. That again is the sea change. So why is it a sea change? Because it means that we have basically shook off all of the bad news of the potential variants, and that the consumers, as we're heading especially closer to the holiday season, and as you know, they start promoting Christmas, used to be Thanksgiving, then it became the beginning of November. Last year, I remember it was even before Halloween. So as we get closer and closer to the Christmas time within the next month, if the consumers come back and that becomes more robust in terms of goods moving around the country, as well as airlines and people traveling as we get closer to the holidays, that could mean not only that the transportation sector and the value stocks are ready to make a move, but it could also mean that it might be time for the Fed to bring back the conversation of taper. So of course, you always have to watch things like the junk bonds and also the regular 30-year bonds, which right now are still showing very much risk on and an accommodative stance by the Fed. So that's the first chart I wanted to show you. So it's two themes today, using almost like a mean reversion, like the classical mean reversion, number one. And number two is looking to what prepare for if that everything I just mentioned to you actually starts to emerge. So let's start with Union Pacific. Now, truth be told, we bought Union Pacific and we got ourselves out pretty much right away. But let's see what's happening here. So let's go back to the real motion. And what's happening with real motion, and I wish I could move this up. Can't seem to move this up. All right, here we go. Here we go. Okay, what's so interesting. So now remember what I told you here. If it touches the Bollinger Band and starts to move up from the Bollinger Band, that could be an indication that it's overextended, right? But we also have to see something that gives us the same type of clue on the price chart, which is why I added this Bollinger Band. And you can see that this touchdown on the Bollinger Band right here. And now, as I'm talking to you, it's moved up a little bit. What's interesting is we have a 50-day moving average right here. So UNP, particularly if IYT actually does what we hope it does, might be another opportunity to get into it. And if that's the case, obviously you can either use under the low this day right here or on 214.80 to be wrong and get yourself out, or close enough, I would say, would be the 200-day moving average. And I would probably say at this point, let's wait for two closes over the 50-day moving average for a confirm back to a bullish phase. And that might be an indication that not only will we continue to see the momentum move, we may see some more leadership coming into the market. And if that's the case, then we can start looking at what happens up here towards the top of the range, which happens to be where the top of the Bollinger Band is. So I hope I'm making myself clear. On the next chart, now this is a railroad. This is the CSX Corp. And manufacturing is starting to improve a little bit in this country too, but we're certainly not seeing it reflected once again in terms of the railroads. So what happened here? If we go to the real motion indicator here, and let's forget about the past a little bit, but you could see it touched and it never broke the Bollinger Band. It got close and now it's holding tight. And so now we want to see this as it's sitting on the 50-day moving average. Number one is we'd like to see it get closer, but we're getting, after a move down and breaking the 50 and holding it on Wednesday of this week, Thursday it's still holding it. What's so nice is that if it continues to hold this Bollinger Band and we can get through, let's say, this high of 32.84 from Wednesday, then you have a really good risk. I would then use the bottom of the Bollinger Band with a little fudge or at around 32.10. You're not going to get much tighter a risk than that. But once again, I still want to see IYT do its thing, because if IYT cannot go up, then I think with the overbought situation we have in the S&P, the NASDAQ also now very overvalued, and IWM trying but not getting really anywhere near its all-time highs, that's really when we can start to see things get pretty nasty. So we really are at an interesting precipice, as I said in the very beginning. So the next one we're going to take a look at is NSC. And I'm particularly interested in this because if you look down here, see how we broke the Bollinger Band, and actually, as I'm speaking to you, we're back above it. That's a classic mean reversion trade, but we're not going to go in just on the basis of that. What we want to see now, I don't think we need to wait for the 200 or the 50. We can see we held the Bollinger Band right here, right on the same day it started to come back over the Bollinger Band on the real motion. So what we want to see now in terms of NSC is maybe wait again for that IYT. If IYT holds, and that's why I think IYT is so important to this whole game. If it does hold and confirms back into a bullish phase, you got a really super tight risk to under this lows, and I would get in and see what happens. If I bring this chart down, can I? Let me just reconfigure this range right here, see if that helps. Ah, there we go. You can see that we've come way off from the peak. But if we hold at all the support level here, we have an opportunity to possibly take this thing right back up to around 270 before we start to reevaluate. The next one now is KSU, and I figured I'd go through as many of these as I can. Now this one looks a lot better, but let's look at the Bollinger Band. We've already cleared that, we held it and cleared it, and now we're sitting at the 50-day moving average as this has cleared the 50-day moving average. So this is really kind of telling us right now that this isn't bad, this type of action. We had a big fall, we had an inside day, and now you can see that it's moving up over the outside day, 295.22, today's high being 295.19. So 295.22 is important. By the time you hear this, it may be through. If that's the case, then you could be taking a look at this as well, especially since it's starting to show some leadership. However, even though it might take out that 295.22, I'd probably say I'd wait just a little bit longer for 296. And where would I risk? Well, as an active trade, you can use the Bollinger Band. As a more of a position swing trade, I'd probably say you can either go to under the 50, although that seems like a lot, or I would just go slightly under that Bollinger Band to under this low right here and risk to under 286. Overall, this does not look bad. It could do a lot more choppy work here, but overall, I'd say of the railroads I just showed you, this is clearly the strongest one. So now let's move over to FedEx. Now, FedEx also interesting, very interesting, because not only did it have a new low here, although it did not confirm on the reversal pattern, the high here was 267.74. This day, it did not close. It opened, but it's not giving me my closing price here, but it doesn't look like it closed over 264. Oh, wait a minute, I'm sorry. Here's another new low, 262.80. This was as of Wednesday. That is a new 60+ day low. And if we can close over 266.69 on this Thursday, We're trading right slightly above it right now. That could be considered a reversal pattern after it tested and held not only the Bollinger Band here, but the Bollinger Band down here. So you see, this could be the classic mean reversion FedEx at a time where FedEx could actually start doing pretty well. So I'd say of everything I've shown you right now, KSU looks good, NSC is interesting, but FedEx might be the most interesting thus far. So now let's move to the airlines. We've got DAL, and that's Delta. Same thing. Look how nice this Bollinger Band with the 2 standard deviations is working for those of you who are more classic mean reversion type traders. We didn't get through the 50 yet, but we're certainly above the Bollinger Band. We're showing a little bit of leadership here, but look at this. We came down and tested this Bollinger Band a few times. We broke it here, and then we broke it again here. We had an inside day and then a reversal on a new 60+ day low. So now here we are, we got to the 50-day moving average. We tried to pierce it one day. We did not confirm the next day. Now we came back down to sort of the midpoint Bollinger Band. And once again, we're trying to tackle that 50-day moving average. So I would say 2 closes, and I'd probably give it a little room, over 41.30 might be a key that the worst is over for the airlines. Say that would be another way to look at this. Okay, the next one has nothing to do with airlines. It's a stock that I have traded a few times in anticipation that at some point it could bottom, and this could be it. Look how nice Uber. This has gone down straight with the Bollinger Band down here, but never broke it since back here in August. So 1 month ago, and which is a long time in this market. And now you can see it held. It's starting to move up a little bit. It touched down right here with the Bollinger Band. Now, I will say what I do like is a clean 60+ day low reversal the next day. This did not have it. But nonetheless, as it's getting through the midpoint, if Uber can get back through, let's say this high here of 42.11, you could probably go ahead and risk to either under this low, or you can use some kind of a midpoint. I'd say probably somewhere, the low here, this 40.15. I'd say somewhere around 40, 39.75 to 40 would be probably a good situation. I'm waiting for this stock to move again, because I do really believe that once things come back somewhat to normal, people are going to be Ubering just like they used to. As you know, at this word, it's like Google. People use it as a verb. I'm going to Uber over to you. Now, the next one is Old Dominion Freight Line. I just thought I would show you this one too, because I'm not really sure. I haven't checked the fundamentals, but this trucking company obviously is doing completely different than everything else I've shown you. So the moral of this story is that you can always find good stocks, even in a weak sector, if you know what to look for. So what was the signal on this one right here was we had the low, the inside day. That didn't really do very much. So it came back down, tested another low, closed above it. And you can see now, once it got back through that Bollinger Band, and if we go down here, this cleared the moving averages, you had a convergence, you actually didn't have a divergence, but you had a confirmation that the momentum was improving. The Bollinger Band was holding here on the upside. And now you could see that this has gone up tremendously along with momentum, which is now on the opposite side. So now what is this telling us? The fact that we're above the Bollinger Band in momentum, if it breaks down below, then we can say that this actually is a little overextended. Right now, it's doing pretty well. For my momentum traders, this would have been a classic type of chart to look at. So the next one is Expeditor, sorry about this word, Expeditors International of Washington Delivery Service. Okay, Washington being obviously Washington State, where StockCharts is located. So right now we broke down here, we're back through on the Bollinger Band. We haven't really gone anywhere much, but we're holding. But more importantly, look at how the price got right down to the Bollinger Band here, just when this started to come back through the Bollinger Band here. So we can say we might have found some good support here at around this 121.30, and we're not that far away. We're actually getting an inside day. At this point, when you're this close to the 50-day moving average and the Bollinger Band on top, I would probably wait for 2 closes over 125.74. And then you have a pretty good risk to underneath this low right here, a figure like 120.40. And that's also not a bad play as far as going forward. So hopefully you're taking notes and writing these down ideas, because remember, I still want to see that IYT do what it needs to do. Now, JB Hunt has also well outperformed the market. And again, if we just look at how this real motion works, it cleared the 50-day moving average here. This was perfect. It cleared the 50-day moving average here right as it tested it again on the price and also the midpoint of the Bollinger Band. So you had a good idea that the phase was going to hold, the momentum was going to improve, and boom, this is what you got so far. Now we're running into a little bit of resistance, but look just how nice that worked. That would not be my favorite trade at this point. UAL also underperforming United Airlines, like all the airlines, but you did have a reversal pattern here. See how it broke the Bollinger Band and then came back through? Then it came back, tested it, broke it, came back through. These are really nice, especially when they hold the Bollinger Band here. This is a very powerful signal. If you haven't bought the ACP plug-in real motion, now with this little nuance change that we've made, this would be the time to do it, because these trades are phenomenal. There is a lot of money here. And now, of course, we have a downward sloping 50 that has to clear. It also corresponds with a lot of price congestion and resistance here at around 48.50. So I'd probably go ahead and wait for that. But again, about a $4 risk at that point. Okay, 2 more. Since we went through airlines, my favorite airline, JetBlue. Same thing, holding the Bollinger Band, starting to show a little smidgen of leadership. But look how nice it broke through the Bollinger Band, had that reversal pattern here, back through it, went and tested it again, held it with an inside day, went back through it. Now some congestion right under that 50-day moving average makes this simple. 2 closes over the 50-day moving average, and I think you can get in there. And I'd probably just risk to these more recent lows, like under, let's say, 14.75, if it clears, let's say, 15.60. And the last one I'm going to show you here today is car. So this is Avis. So this is like rental car. So I didn't show you Hertz, obviously, because I didn't even see that in the basket as I was looking today. But look, rental cars we know have been hot. They've been hard to find, and they have been expensive. However, we're nowhere near where we should be in momentum while we're showing leadership, and the price is high. So what does this tell me about this chart right here? If we're looking at mean reversion on the downside, perhaps mean reversion on the upside, this is showing right here that this might be a little extended because we haven't been able to get through the top Bollinger Band. And you can see we got through it here, and the next day it broke it. We got through it here, and it never cleared it again. So here's another time where we got through it, and the next day broke it hard. So this tells me that even though this looks like a great momentum trade, at this point now it may be overextended and not a great buy. That's why I wanted to show you some things that are overextended to the upside that you want to stay away from, and some things that are overextended to the downside with just a little bit of help from our friend IYT could really set up as your great trades, and also, like I say, be a big sea change going forward for the rest of this year, at least to the end of December. Okay, I hope that was helpful to you. You all have a really nice long Labor Day weekend, and I will see you all next week. Thanks so much for watching, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.